this. Let's connect with the management of Marico then. Saugata Gupta, who is the MD and CEO of the company, is joining us right now. Hi, good afternoon, Mr. Gupta, and thank you so much for your time. But before we get to your Q3 earnings, share us your take on the union budget. It's been a big booster to the consumption. So how do you see your industry getting impacted as well as getting a boost from the announcements that has been made? And going ahead, what's your sense that what will actually go ahead and drive the consumption, especially in the urban markets?
I think this is a budget that will definitely help to drive consumption. If you look at in recent times, especially in the urban middle class, there has been some stress, a combination of high food inflation, with the fact that the real wages haven't taken significant increases in the past couple of years, plus the fact there had been no significant tax breaks. So this is a very, very bold move. I think a very, very much needed move to drive consumption. And also sometimes, consumption is also driven by a feel good factor. So this will be a multiplier in terms of the actual money that has come into the consumer's hands. And I think it will definitely positively impact a lot of sectors which had been impacted by this low demand sentiment. And I believe this is something much needed, and it's a very, very bold and a pragmatic move on the part of the government.
Okay, Mr. Gupta, this is Snehi also joining in. Operationally, Q3 has been a rather decent quarter for you. Top line looks good. There's been a volume growth of 6%. You've outperformed some of your peers despite facing the same input cost inflation that they have also faced. Help us understand what factors have contributed to this performance and what's your outlook for domestic volume growth going ahead?
A couple of things. I think while there has been some stress in some parts of the core, we have especially in a brand like Parachute and Saffola, we have been very resilient in terms of driving volume growth. As you know that, yes, we face significant input cost pressure, but over the years, given the volatility and the black swan events, we have institutionalized an extremely strong cost management program. And if you look at it, we are one of the very few companies we have managed to deliver, bottom line growth without cutting into A&P. We continue to invest behind A&P. The two things that have been going very well for us is our diversification. If you look at the digital business and the food, that continues to drive growth and also improve on the profitability as we scale up. And we have a very, very resilient and a strong international business that has been quarter after quarter delivering constant currency growth. We believe that we would like to, keep the domestic volume growth in this zone, and it might slightly creep up now that we believe that the urban consumption sentiments are far more positive. But overall, I think what we need to do is to continue to deliver, top quartile volume growth and, maximize and deliver double-digit revenue growth overall, as well as ensure that we cope up with some of the transient headwinds on the input costs, which I guess will ease out over the next 2 quarters.
All right, Mr. Gupta, but when we see your raw material prices, there we have seen significant surge in terms of the copra prices as well as rice bran oil. So help us understand that how are you managing these kind of price pressures, as well as how much price hike have you already taken, and going ahead in the upcoming quarters, how much more headroom do you believe, or how much more need do you believe there is for more price hikes?
We have taken some price hikes in both Saffola and Parachute. Now, if we look at copra usually has an 18-month kind of a deflation-inflation cycle. So we are at the fag end of the inflation cycle. So in a couple of months, sometime in Q1, and this will start softening as the season comes in. And therefore, the margin pressure will start coming down. I think in the meantime, we believe that we have been extremely resilient, and therefore we will see through the kind of the margin pressure in the immediate future, and we are reasonably confident of delivering around 20% EBITDA next year also.
Okay, and Mr. Gupta, you have mentioned in your presentation along with your earnings con call, you wish to remain watchful on the margin front over the next couple of quarters is something you've said. Help us understand if this could translate into you revisiting your margin guidance, since that number has slipped below the 20% mark in Q3, it's come around 19%. Will you be revisiting this number anytime soon?
So just as I said, that obviously there would be some immediate term pressure, and we start picking up in the second half of the year. So I think, and also some of the margin improvement could come from as we get scale in our diversified business and also international business. So as of now, we believe that this will be the likely number, and we'll see as it goes over the next 2 quarters.
But also, Mr. Gupta, talk to us about the kind of adjustments you have been taking with respect to the general trade channel. Is that overhang now behind us? And also, if you can give us a sense and a split of how much the general and the modern trade channels contribute to the overall sales.
I think it is a continuous process because, as you know, especially in the top cities, right now it's quick commerce which is driving a lot of growth. But the fact that general trade is under pressure, it is our duty to that ensure that the viability of the sector, because it not only it's a very, very critical channel, will continue to thrive, especially as you move beyond the top 10 to 12 towns. It is also employs a lot of people, general trade, in terms of the retailers, in the terms of distribution system, that creates a significant amount of employment to the entire country. So it's very, very important that we are also equally responsible for keeping the health of that the channel. I think what we have been trying to do is to ensure that how do we keep on reducing stock covers, ensuring other kinds of efficiency so that those get passed on so that the channel makes a significant ROI. Similarly, ensuring a different portfolio for organized trade and ensuring less channel conflict and price conflict. So these are the things we are going to do. In India, it's going to be an and growth. It's not an all growth, one growing at the cost of another. And we believe that even in the next 4-5 years, general trade will be, especially in rural or in the smaller towns, general trade will continue to thrive. Yes, there is stress at the top end.
Okay, Mr. Gupta, also share with us your outlook when it comes to Saffola oils, because the pricing cycle over there has turned favorable after a whole 2 years. Can we expect to see a high single-digit to low double-digit volume growth in that segment, since this quarter you've logged in a low single-digit growth? Can that be inching up anytime soon?
I think one of the things we have been prone to is volatility in terms of the raw material pricing. And also, as we said, that for us, the entire objective is to ensure that within the Saffola franchise, how does foods become much bigger, because food makes higher gross margin than edible oil. So we are happy to deliver mid-single digit growth as long as we maintain profitability of Saffola edible oil, but disproportionately grow foods. And that's so in another couple of years, it will be food will be bigger than Saffola edible oil in the franchise.
All right, and lastly, your value-added hair oils have seen a value degrowth of actually 2%. Have you undertaken any price hikes here? Help us understand that. And also, competitive intensity is also rising in this particular segment. By when can we expect to see some recovery in this?
Value-added hair, we haven't taken any price increases. I think there has been shrinkflation, especially in our Shanti Amla portfolio. And if you look at it, as we said, that there has been significant competitive pressure at the bottom of pyramid. We want to invest behind, in the mid and the premium segment. And there, I think now that with this budget, we expect consumer urban sentiment to improve. I think we should be starting to, see a little more positive traction in this portfolio. I think what has also happened is the overall spend in the category had gone down. We intend to continue to invest behind the category and grow the category, especially at the mid and the premium end.
Okay, Mr. Gupta, thanks so much for joining us and speaking to us on ET Now. On that note, we'll let you go. Thanks for giving us a quick lowdown on your earnings and the entire consumption space.